weekly recap, weekly outlook. I mean, for week 1 of November. All right, let's start here with the news. Let me add in the major euro and dollar pairs. See if we have any news for that. All right, so what we're looking at first of all is today the US is going to be time shifting, so the time difference is going to go back to normal and not everything's going to be an hour earlier for me, which is nice. On Monday we're going to have a 10 a.m. New York time red folder, and then on Tuesday we have JOLTS job openings as tentative because of the government shutdown. Essentially, it's not going to come out unless the government shutdown reverses before Tuesday. So yeah, so it's essentially just not going to come out. Then on Wednesday we have non-farm employment change, so the pre-NFP folders is coming out, and then at 10 a.m. So the ISM services manufacturing, the ISM PMIs are being released through the shutdown. Then we have a triple 7 a.m. New York time pound folder, and then a 1:30 pound, so big pound news on Thursday. Then we have, once again, tentative unemployment claims and then tentative NFP, so not releasing basically. Okay, yeah, so that's what the economic calendar is looking like. And then let's pop on to the charts. I'm starting on the monthly chart here just because, right, November, new month is starting, so I thought it might be appropriate to get the zoomed out look of the monthly chart in. Yeah, looking at just this, to me, I could very much see our target on dollar long term being this monthly gap, right? Because we come down here, right, we sell off earlier in the year, then we retrace and look to continue lower, finding sensitivity in the lower portions of this wick. But once we purge this swing low that we put in down here, instant reaction higher. So we purged external, so to speak, right? We engineered external liquidity, then we purged external, and we're displacing away from the external. That means, in simplest terms, the draw is internal, right? So I could see us running for this, like, just overall, giving us kind of like a bullish sentiment deep down on dollar. Near-term targets for me is going to be this swing high up here, right? Last week we broke out of the inside week formation we had going on there. And yeah, we pushed higher. Nice bullish price action to end last week. And I think we're looking for this buy side up here as our drawn liquidity for the week. Obviously, it seems quite obvious now, but we've been calling for this for a long time already, so I get to do it now too. Yeah, so our daily chart, I mean, this is like just pure bullish order flow, right? We bullish move, retrace to around equilibrium, bullish move, retrace to around equilibrium, bullish move, retrace to around equilibrium. So we're always expanding, then we're retracing to a discount, expand, retrace to discount, expand. Potentially we see a retrace to discount and then another expansion, or we could just continue expanding. Anyway, either way, the draw is up here for me, right? This high up here on dollar, and then looking at the majors, what does that mean? Well, first of all, looking at euro, we have the same kind of thing going on as on dollar, but also on that wick above to the external, we actually reach into this monthly gap that we had left, you know, a long time ago. So yeah, on euro, you could very much see this as the appropriate draw compared to what we have marked out on dollar, right? Equivalent to it, I mean. Now on euro though, it's quite easy to tell that we're less bearish on euro than we are bullish on dollar, just by the distance to August lows versus August highs on dollar. August highs were the level I had just marked out as the target for the week on dollar. And if we mark out our August lows here on the daily chart on euro, we can see that we're still decently far away from there. So this could end up also being some kind of SMT. At the moment, I just see it as relative strength in the euro, so to speak, that even while we're selling off in all pairs correlated, right, it's still kind of not doing as much as the others to the downside. And then looking at pound, I'm going to zoom out to the monthly because we've already reached the said monthly gap that I just mentioned on dollar and euro, right? Pound's already there. We had a monthly SMT on that external that euro and dollar took, while pound didn't take it. And the target we've been looking for a long time, which is that gap there, has been taken. Now, from perspective of could we go lower from here, or are we going to instantly turn around and go higher? I think we can very much go lower. The next price point or like level to look at, for, in my opinion. Oh, wait, let me cook here. Is equilibrium, right? So price trading actually down into a discount for a potential reversal, but yeah, like where we are now on pound, we could very much argue the fact that that's a level for reversal. Like I can't say it's not. It could be, but I'm also saying not saying it is. Anyway, let's drop down to the daily chart, and basically what it boils down to, pretty simply, is just on this drop down, we've had daily displacement. We have our daily bearish fair value gaps here. Yeah, if we start disrespecting daily key levels from a monthly, like daily PD arrays from a monthly fair value gap, right? Then that's an indication that we're looking to reverse from that monthly gap, and we're looking to start a monthly internal to monthly external, where the daily chart would then be the market maker model that is playing out. Which, again, looking just at the sell side of the curve, like a lot of stacked highs, right? Not like low resistance highs, not high resistance. We also have relative equal highs at the top. So very much a possibility. But at the moment, all I'm looking for on majors with how price is formed is underlinedly bearish. And then the only key levels that have my interest at the moment, since we just don't have many on euro, are the daily bearish fair value gaps on pound. So starting off with this one, and if we then tend to reach up a little higher, I'd look for this one. But honestly, from a perspective of wanting to see a continuation and a flush lower overall, I'd like this fair value gap to stay open, and this honestly just to fill to maximally halfway, but we'll see what happens there. Anyway, I'm watching that gap on pound for a continuation lower. That's the summation. Moving to indices, I think indices could go two ways from here, and both are leaning on the fact that, to me, I don't see a reason to try and call it top, so I am just bullish straight up. The two ways I could see this going is number one, or I guess this would honestly be number two, but it doesn't really matter. One way is we purge previous week low on NQ and ES, right, leading us into those weekly gaps that we just formed. And then from there, we're going to find some sensitivity in that weekly gap, right? We also have the liquidity void that we left on displacement, or on the gap up last week. So like we have some stuff going on in there for us to find sensitivity in. And then from there, we look to continue higher. And plan B, or plan A, whichever way you see it. The other plan is from the daily chart, we have daily SMT to that gap up, right? ES is digging in it. Pause. And then Q isn't. And we also have daily consecutive candle SMT, right, on Friday. And Q fails to take previous day low, and ES takes previous day low. And on Friday also, if we look at NQ, there's a valid setup that is present in price right now for my models. So, sitting in here. So essentially option one is, oh, okay, we're bullish. Option one is we just run higher. Yay, yibbity dibbity day. Option two is we run this low down here, and then on NQ make our way down into this low down here, and then we look for a 4-hour market maker model from the weekly key level, and the continuation higher comes from there instead of from the daily gap. I'd prefer the daily gap just because I don't need to take a loss if I don't have to, but if it's going to be a loss, it's going to be a loss. Anyway, moving on to gold. Now, gold, to me, I'm looking at this quite simply, right? We've been so bullish. We just had a huge retrace. We've essentially, okay, I can. Actually, there's like a consequent encroachment type tool in here, right? Let me see if I can line this up. No, never mind. Let me just stop being stupid and take this. Like, we've actually almost made it to discount. If we look at it from a premium discount range from this high to the latest swing low on the weekly, so that's impressive. I'm not trying to add any text. Don't force me to add text. Now, if we look at this from a monthly chart, right, with the idea of that new month opening next week, or like tomorrow, let's have a monthly gap on gold, and I'm pretty sure on silver as well. Yeah, so we could also dig down into the monthly gap and then run higher from there. Like, that's a possibility. So possibility is kind of like NQ, except framed one time frame higher. Possibility A is we start digging into the monthly gap and we look for a reversal on the daily chart from there, and then potential trades in the weeks coming on a daily market maker buy model, right? Fractals from that. Or we're just gonna be the gold we've known these couple of weeks. We've kind of tricked people short, stopped out some longs, and then that's all we need. We're going to leave that monthly gap as a breakaway gap, and we're going to charge higher off this weekly to 4-hour alignment that we've kind of got going on here. Those are the two options, so to speak, on gold. So, yeah. Overall, I'm bullish on gold still. All right. We do have this daily bearish gap as well, which we don't have on silver. We don't have a valid setup from here yet. In theory, if we do get one, it could be a reason to cancel the long that I'm in, right? Like, not cancel it, but like close it and then take a short. So I am also watching that if we can get like a clean formation of something. But overall, I'm sticking to my guns on the bullishness here. And then just as a end to kind of continue framing what I want to see, especially on the majors and with dollars bullishness, is I think for bonds, I want to see them draw down into this sell side here, right? We've been bearish from these highs that we purged. If I just swipe through all the bonds real quick, they all have a similar structure there to purging the high and then selling off. And I want to see those daily gaps that I've marked out kind of hold going into the week, and then see a push lower from there to kind of get in line with what I want to see on dollar. Like, that'd be the best case scenario if everything kind of syncs up with that. So yeah. All right, that's it. Peace out.